Talk to me about how investors should think about the activities of today, how they should look at their portfolios. Would you advise them just to not?
So, Tyler, you just had two experts on that know an awful lot more about geopolitics than I ever will in my entire life. So I won't go there. But I will say that I think it's a pretty good bet that this is another nail in the coffin of geopolitical, of basically globalization, right? The globalization is now contracting. It has been contracting. It's continuing to contract. This is not going to help that. For investors, I think the takeaway from globalization contracting is that there will be more inflation rather than less on a secular basis, right? We could all argue about what's going to happen in the next 2, 3, 4 months, but on a secular basis, the contraction of globalization means you're going to see more inflation.
More inflation in terms of commodities, materials, industrials, and so forth. I assume that's what you're driving at, and foodstuffs, for example.
Pretty much everything. You have to remember, Tyler, our trade deficit shows that the United States has been losing market share for basically 30 years. We can't recoup that market share anytime fast. So as our suppliers, if you will, begin to contract, and as the availability of goods begins to contract, we should expect that prices will go up. Just simple supply and demand.
There is one thing that if I were looking for positives out of what has been going on in the world over the past, let's say, 2 years, it might be the reshoring of production away from places with far-flung supply chains back to the USMCA. True?
Yeah, I think, Tyler, there is a real hidden investment growth theme developing here that people are completely ignoring. And that surrounds itself with the industrial sector. Whether you're talking about bringing manufacturing back to the United States, that's the industrial sector. If you're talking about infrastructure, that's the industrial sector. If you're talking about geopolitical instability, well, that's aerospace defense. That's the industrial sector. There are many different ways now that the industrial sector is at the center of a lot of things that are going on in the world. So whereas everybody's kind of focused on the intangible goods associated with technology, the future theme may be tangible goods associated with the industrial sector.
And Rich, if you could be more specific, to the extent that you're comfortable, but do you think that means, the industrials here are an opportunity? We hear a lot about energy, obviously. I mean, how should investors look at this and say, okay, well, then these are the places where I kind of want to plant my flag?
Yeah, well, I think, Kelly, you mentioned energy. I think energy is another huge theme that people think is just transitory, to use the word of the day, that they just think it's transitory. The energy sector has the highest dividend yield of any S&P sector, and believe it or not, the second highest 5-year projected growth rate of any sector. Right now, energy offers you both value and growth. It's offering yield and growth, and people think it's just a flash in the pan.
Sounds like it has some staying power, for better or worse. Rich, thank you so much for joining us today. Good to see you.
Yeah, good to see you guys, too. Thanks so much.